As we just teased coming into our final commercial break, because now we're not taking them anymore, there were two mystery men that we showed you before we tossed to the break. Well, let us reveal their faces. Now, while President Trump often takes aim at the Fed's Jerome Powell and the central bank for the market's recent steep declines, Peter Schiff says actually both parties will be the ones to blame when the recession he says we're about to see makes the financial crisis of 2008 look like the roaring 20s by comparison. Schiff is here. He is the author of The Real Crash. Euro Pacific Capital CEO Peter Schiff joins us. But in the spirit of fair and balance, the man in charge of the trading group at TD Ameritrade, Executive Vice President Stephen Quirk, says October's volatility, and especially what we're seeing now, in no way signals the end of the world. All right, Peter, to you first. Why are you blaming both President Trump and Jay Powell of the Fed?
Well, I'm blaming both political parties. I think that the Republicans are going to take the blame because it's going to blow up on their watch. But if you want to name names, you got to go back to Alan Greenspan. You know, he's the one that really wrote this playbook. Every time we had a bear market while Greenspan was, chairman of the Fed, he would quickly restart the party with cheap money. And so we set this process in motion, but it's not going to work anymore. We've done it too many times.
Why is President Trump to blame, and why is Jay Powell to blame?
No, they're going to get blamed because they're the fall guys. But the problem started long before Trump was elected. You know, he called this a big, fat, ugly bubble when he was running.
But he's the one now asking for rates to stay low. Are you saying that the Federal Reserve should not raise in December, Peter, or should it even, dare I say, cut rates?
No, look, it should raise rates, but the market's going to collapse as a result. I mean, they just haven't figured this out yet. We have a gigantic bubble. And the point I wanted to make is this bear market is not going to end quickly like the ones since 1987. This is going to be a protracted bear like the one we had from 1966 to 1982. 16 years without a new high. And meanwhile, the cost of living went up dramatically. The cost of living is going to rise even more dramatically during this secular bear market. And look, there's nothing that can be done to stop this. But unfortunately, you know, for America, I think the rhetoric of the Republicans and Trump, tax cuts are going to get blamed.
Hold on. We're
deregulation is going to get blamed. Yeah.
We are now heading to more session lows here. We are now down about 411 points. Steve Quirk, you have the benefit right now of the TD Ameritrade herd, and you can check in on that herd and see what they are or are not doing. You have a massive $1.3 trillion in assets over there. How is the herd behaving, and are you as bearish or worried as Peter is?
What I'll do is I'll give you a reflection because thanks for having me. I think the value that I bring is telling you what our 11 million retail clients are doing. Last time I was on about 2 weeks ago, I told you they're quite contrarian as a group. So when we see sell-offs, typically we see stronger buying. We've noticed in the last 4 months that sentiment has really dialed back. In other words, the buys and sells are almost evenly balanced, and we're seeing more rotation into what I would call the cyclicals, the utilities, things that they think lower beta stocks that are going to protect them should we continue to see this down move. So I would say they're not optimistically saying this is going to bounce right back, but they're also not saying this is the end of the world.
Peter, corporate earnings for the S&P, we just saw them upgraded for this third quarter, that they look to be up about 25.2%. We've got a lot of big names coming out this week. Is there not the chance that some of these names could really engender positive feelings about it for investors? And I know that you are bearish on U.S., but you are not necessarily bearish elsewhere.
Well, you know, there is a lot of optimism about earnings, and unfortunately that's already priced into these stocks. But, you know, I think a lot of the earnings came from lower taxes, maybe about a third of it. But, you know, a lot of these earnings are going to go away during this recession, and especially as interest rates keep rising, because a lot of companies took out a lot of debt during the boom. Now they have to service that debt during the bust. Their revenues are going to go down. So earnings could collapse very quickly. And so stocks have got a long way to fall. The market is very overvalued. And I think there's so much complacency out there. You had record highs in sentiment, in consumer investor sentiment, small business sentiment. Nobody expects the recession, right? But then when it hits, everybody is surprised. And this time, they're going to be even more surprised. And I think it's going to make the recession that much worse when it starts, based on how ill-prepared people are.
Guys, I need to just point out something. The 10-year yield, and I've been keeping my eye on it for the last 35 minutes. When we came into the show, we were at about 3.09%. It's dropped 2 basis points now to 3.07%. What does that mean? And I articulate this. I know it's on the lower ticker, but we've got a lot of folks in the car listening on XM 113 to us here on Fox Business. That means that there's fear in the market at the moment, and I'm pretty sure the VIX, indeed, it is moving higher right now, pretty much at session highs. The fear coming in spurs a sort of a flight to quality, or a flight to a safe haven. But Steve, talk about things that Peter maybe doesn't see. You know, we got a decent GDP number just recently for the first print on third quarter. Our unemployment is low. Peter would say that the unemployment was low in 2007, right before that crash.
Yeah, I would say, look, I think I'll give it to you through the eyes of our clients. What they're looking at is saying, earnings are pretty good. Half the S&P is now reported. Quarter of them are going to report this week. Economy looks pretty good. Obviously, there are a lot of concerns with tariffs and some of the other things going on, but there's if you look at the volatility levels, today it's 26, 27. If I go back historically and look at moves like this, we'd be in the 30s. And I'm not saying that's a perfect indicator, but I think what our clients are trying to do is just assess whether this is, an opportunity for them to maybe dip their feet back in the water and get some more exposure, or just to sit tight.
Okay, very quickly, Peter, what are you buying? What are you putting money in?
Well, first of all, earnings are always good at the beginning of bear markets, and the numbers always look good when the recession starts. Yes,
answer my question.
Look, gold. You talk about fear. Gold's not even up today. Gold stocks are on sale. That's where the sales are right now on the gold stocks. And look, a lot of the international value stocks that I've been buying, many stocks were up 10, 20% last week. A lot of people didn't notice that. But as this bear market is starting, people are shifting. They're relocating out of the momentum type stocks to the value defensive names.
Okay.
And that big shift is going to be out of U.S. stocks, which are the biggest bubble, into some of these undervalued foreign stocks and emerging markets. That's where the real buying opportunity is. I wonder how many retail investors are buying the emerging markets now, or buying gold stocks. I don't think many at all. And I think that's a great indicator that that's where you should be.
Dow Jones Industrials now down 415 points. The NASDAQ down 188. Steve Quirk, Peter Schiff, thank you on a very busy day. Peter Schiff was still sitting in front of his camera, so he is still with us. Obviously had been a town crier warning about this kind of situation that we're seeing with the markets, although we're off the lows of the session, down 328. Phil Flynn is standing by at the CME. Susan Lee is at the New York Stock Exchange. Susan, give me a sense first of what the traders are saying on the floor. Susan is not ready. All right, Peter. Actually, let me go to Phil Flynn. Phil, you're on a trading floor. We blew up the commercials here because we really are starting to see some pretty serious gyrations. What are you seeing, and what is driving it? There was some concern about trade headlines.
Well, that was the main thing. I mean, the market looked like it was starting to turn around. It looked like everything was calm. And then we get blindsided by this report that President Trump is basically saying if this deal doesn't go good with China and President Xi, that there's going to be more sanctions being put on. In fact, maybe more sanctions on every good either produced in China or sent from China. So it really raised those concerns of the trade war. But as you notice, we're already bouncing back off the low. The one thing, what we've seen in past sell-offs due specifically to trade war threats by the Trump administration, we always get that knee-jerk reaction and the market bounces back because we really don't know what that means. There's a lot of ifs, ands, or buts about this. It's not going to happen until December. And so already I think the market's saying, wait a second, what does this mean? We already know that if these talks don't go good, there's probably going to be more tariffs. And I think that's why we're getting more calm, at least after the initial plunge. 9 minutes left before we close the markets out, and we hear the bell ring. Dow Jones Industrials, which had been down, low of the session, Jackie, 566. We are down 339 right now. Peter Schiff, the volume is not particularly heavy. There is not a lot of conviction on this sell-off.
So why do you not look at this and say, wow, Boeing is 7% cheaper today. It's a great company. Why don't I buy some Boeing?
Like, you know that trick from department stores. They always have sales, but they have sales on overpriced merchandise. It doesn't mean that you're getting a bargain. And, you can't always look for a reason for the decline. Bear markets don't need a reason to go down, or more specifically, bubbles don't need a reason to deflate. That's just what they do. And, when you look at what's happening in the stock market, realize that this is happening in the real estate market. This is a big decline in assets that were propped up by artificially cheap money that is no longer as artificially cheap. And as people watch their home equity evaporate and their retirement savings go up in smoke, what do you think is going to happen to the spending? What do you think is going to happen to GDP? This is just not a decline. This is a recession that is coming, and it's going to be a brutal recession because there's absolutely nothing the Federal Reserve can do about it. They're going to try, but rather than reviving the economy or the markets, they're simply going to stoke the inflationary fires that are already burning.
Alan Nuckman, you're on the floor of the CME. Can you tell me what flows you see as we come up off the floor? We're still down 308 points. And if you look at the volatility index, it stands at 25.81 with a gain of 1.65.
Yeah, let's talk about that. That's very important because we're at below 26. The high on October 11th was 29. So we did not even make new highs in volatility, even though the market's trying to make some new lows. Today feels bad because we gave up gains once again. We can't find a bottom. The market was up significantly. Now the S&P is down 1%. Let's talk about percentages, not points. I mean, a 1% move in the market. Yeah, we had a long period of time. We had a quarter where the S&P did not have a plus or minus 1% on a closing basis for more than 90 days. We're not used to this market movement, but I'm looking for signs of stability, and I think the fact that the VIX has this bullish divergence can be viewed as a positive. And to call a recession now, considering we're about a month away from all-time forever highs, that's being a little aggressive. And rates right now are what, 2.5%? To act like we're at 15% and we have 5% inflation, I think that's getting a little over your skis.
6 minutes to go before the closing bell rings, and we are still in commercial-free mode. We didn't start off like this, folks. We had a whole different show planned, but with Susan Lee, Peter Schiff, Charlie Gasparino, Alan Nuckman, and Phil Flynn standing by, we have your back covered. Susan Lee, you're on the floor of the New York Stock Exchange. Yeah. Some of this reversal started on two pieces of news. One hit technology, and that was the European Union, United Kingdom, Britain, possibly imposing a digital tax. Correct. And then we had what our traders have talked about, the White House possibly threatening new and more tariffs, more onerous tariffs on the Chinese. What are the traders saying on the floor there?
Yeah, well, it was contained heading into this morning. We had a nice rotation upwards to start off the day, despite the fact that we got the news from German Chancellor Angela Merkel and her Christian Democratic Party. She's not seeking re-election there. No reaction on the markets, but you're right. Then we had that UK news on that sales tax and downgrades from JPM and also independent research on Amazon. And that's when you start seeing the levels tick lower. And then this news on China trade. And that's been brought up over and over again, Liz, on a lot of these earnings calls. And we do have big earnings this week. So do we get that turnaround? People were looking for some sort of floor that was given if Apple came out with a really strong number. A lot of buybacks as well, hoping from a lot of these corporates who are looking at these levels, thinking it's cheap, and they've been the main buyer of a lot of stocks so far this year.
Okay. Charlie Gasparino, not that I'm shifting any focus away from equities because we're still down 316 points, right, but Bitcoin futures are also tanking. There's really no kind of flight to safety or flight to something special or different. We've got gold down, which Peter just referenced too.
Yeah, I'm not in the Peter Schiff camp thinking that we're in a dire recession here, or even, but you gotta look at some of the numbers in that GDP report, and you start to get scared that we're heading towards one. Look at the fact that business investment was way down. Look at the housing market, not doing so great right now. Interest rates, both are somewhat related to interest rates going up, but also that the corporate tax cut, did not produce enough bang for the buck that I think it needed to do. Because if you cut taxes this much, and it's a massive corporate tax cut.
Peter, you've talked about debt,
let me
too.
just make this point. Let me make this one more point.
Well, you guys fight it out because you're both on the same page.
I know, but I want to make one other point. That report, that GDP report, gave Jerome Powell some light, some sort of it gave him some cover not to raise interest rates in December. But Donald Trump did something very foolish. He attacked him publicly, and now he has to raise rates in December. And I think that's going to be a problem for the economy.
Peter, give me 15 seconds on this quickly.
You know that GDP number, they engineered that by bringing the inflation rate down from 3% to 1.7. And, look at the consumer income numbers this month. They're terrible. And, last quarter, trade subtracted the most from GDP in 33 years. We are losing the trade war big time. Our trade deficits are exploding, just as our budget deficits are going through the roof. So we're having going to have a bond crisis as well as a currency crisis. That's what's going to make this bear market and this recession particularly bad. And look, it's just getting started. We're early on. So, this thing is going to be playing out for years.
We've got today's closer standing by. Aaron Gibbs is senior portfolio manager. You see how I did that? See how I did that, Aaron? Charlie started to jump in. Aaron Gibbs.
I didn't start to jump in. I was still blown away that Peter thinks it's the end of the world. But go ahead.
Okay.
I didn't say the end of the world. Just the end of America.
Aaron, let's take Aaron's shot so that we can get the two guys to hold off for a second. What are you purchasing? I mean, what do you look at right now on a day like this?
We're looking at some of the value stocks. We've been saying that the spread between growth and value has been too big. We really think that investors might start looking at reevaluating what they really want to pay for when valuations are so much higher for some of these growth stocks that have slowing growth for next year. And so one of the utility stocks we like, First Energy, is one, as well as the Staples Constellation Brands is another one of our favorites. And they've been holding up well in these downturns.
Yep, you can look at that. And as things ramp down, I would say, Susan Lee, we're down 281 points. At the low, we were down 566, Susan Lee. Can you give us sort of a feel from the floor before we bump up? 2 minutes to go, 1:30 actually, before the closing bell rings.
So, Liz, I can tell you right now that there isn't a lot of panic here. People are taking this in stride. We've seen this before. No one thinks it's the end of the world, as Peter Schiff says. I can tell you that. They think, look, this is a understandable correction, which is 10% down from recent highs. It's a rotation from growth to value. And yes, there's a safety trade taking place. But again, there's no fear on the markets.
Phil Flynn, give me 10 seconds on what you're going to do tomorrow in the morning when this market opens.
A day like this is why they invented the term turnaround Tuesday. Come down on one headline that's around Tuesday. I think we're going to be fine. Probably a great buy in here
Alan
somewhere.
Nuckman from the CME, what do you think?
It's all about earnings. You can't forget that. That's what prices out stocks. Stocks are not a reflection of the economy. Look at the corporate profits. Amazon had the greatest profit in its history at $3 billion. And the stock, they took some profits off the table. That's all this is.
Aaron, leave us with some type of focus for tomorrow as we get bump up against this closing bell.
Think a little defensively. We may see this going forward in a little more value plays going forward into 2019.
Yeah, which is Susan Lee's point that you're seeing that rotation. We want to thank everybody for jumping in front of the camera.